It's gotten harder to beat most markets where's too much money.
It's a terrible situation for people.
The standard human condition is ignorance.
The costs are just up.
It's while precious metals went up.
Inflation has increased notably in recent months. The 12-month change in PCE prices was employment in this sector and the economy as a whole remains well below pre-pandemic levels.
If GDP is $60,000 per capita in the United States, that nobody should get left behind. We've got a market system that works marvelously in printing out what goods and services.
This conflict, this polarization, this wealth gap, and how we're at each other's
I've always
throats.
assumed that in a lifetime of participating in the American economy, it's going to move forward.
Alrighty, here we go. Do you ever wonder why it feels that things were cheaper in the past? Like back in your parents' day? And prices go up over time, right?
Price, it's silly, you got your rent going up, you're putting the milk up for my kids, you just can't carry on.
Well, 5% no good to nobody, is it?
And you can see it everywhere, even in the price of coffee. Things keep getting more expensive. Simply, that's inflation at work. It's something people follow closely, but when it moves up quickly,
Well, then everyone loses their minds.
and this is something that it is easy to get carried away with. But historically, it's nothing new, and we're getting better at managing it.
Seen our policy adapt, and you'll see it continue to adapt. We will use our tools to make sure that higher inflation does not become entrenched.
So you might be asking, what does all this mean? Well, luckily we've got a solid yet boring answer.
Go on.
Follow the market. Many YouTubers have been saying this for a while, though the financial rewards of becoming clickbait material are catching up with a few of them. But simply, keep doing, at least in part, what you were always meant to be doing. By simply tracking the market by using low index funds, you would have done really well out of even dollar cost averaging on the absolute high points before the biggest three crashes of this millennium, the dot-com bubble, the GFC, and COVID-19. If you'd saved up and invested large sums on just these 3 days, despite being the absolute worst timed investments in the S&P 500, you would still be up an amazing 150% in the last 20 years from low risk, low effort investments. I'm not sitting here saying that there isn't any utility in what is being said in the current YouTube clickbait climate, such as taking more active approaches to limiting your exposure to high inflation. But I am saying that you need to remember the fundamental advice from people like Warren Buffett and act on this first before then using part of your portfolio on more active or speculative investments. So all this is to say, build your investments upon a strong foundation of smart investments, like buying low-fee, broad index funds, even if that is boring, before giving too much credence or emotional energy to clickbait advice and indulging in more speculative investment strategies. Simply, don't overreact to inflation.
Oh my God! Okay, it's happening. Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm! Wait. Everybody calm down!
The core principles of allocating a reasonable portion of your portfolio to broad index funds and similar investments is still correct. Keep investing in these. After all, irrespective of the prices of goods going up, the price you pay for them still goes to the same companies who make up the S&P 500 and similar indexes. As a new channel, guys, we really don't have many subscribers, so when we say we would really appreciate you subscribing to our channel, we genuinely mean it. Please comment below any ideas you'd have for more videos in the future, as the purpose of this channel is to provide a more balanced view on the financial issues than the clickbait environment of modern media might otherwise be doing. So we do really want to hear from you and what you have to say. Thanks for watching, guys.